Hi, this is Derek Hodges of Anchor Point Wealth Management. Some of the headlines in the financial press have been downright frightening lately, but the bottom line on all the important forward-looking data is that continued economic growth is ahead. The best indicator of economic activity ahead, the U.S. Index of Leading Economic Indicators, has just been released. The LEI rose by 0.3% in July, which followed increases in June, May, April, and March. In the past, the LEI collapsed in the months before recessions began, reliably indicating trouble ahead. Nothing like that is happening now. Meanwhile, the global economy is expected to grow by 3.5% in 2017 and 3.6% in 2018. The IMF recently lowered U.S. growth projections from April, reflecting the assumption that government policies will be less expansionary than previously expected. The IMF's growth expectations for Japan, Europe, and China were revised up, and inflation in advanced economies remains subdued. Inflation is declining in several emerging economies such as Brazil, India, and Russia, according to the IMF. This is the brightest forecast for the world economy in years, and an expanding world economy fuels U.S. growth. Unemployment has not been so low since 2001. The balance sheet of Americans is about as strong as ever, personal income after inflation is accelerating, and the consensus of 63 economists surveyed by the Wall Street Journal in July was for an average growth rate of 2.5% over the next 5 quarters. That's not chopped liver. The barometer of American promise, the price of the Standard & Poor's 500 stock index, is hovering around 2% off its all-time high, reflecting the rosy forecast. U.S. political uncertainty, a natural disaster, the standoff with North Korea, or a totally unexpected event could trigger a 10 or 15% drop in stock prices. However, the economy shows no sign of weakening, and a recession and bear market are not on the horizon. The leading indicators and an entire array of economic benchmarks are looking good, and despite some bearish predictions in the press, this 98-month expansion, the third longest expansion of the post-World War II era, could continue for many months, and stock prices could be driven higher still. As independent financial professionals, we are a trusted channel of news and analysis about wealth management, communicating at a frequency attuned to you. Subscribe to our email newsletter to see our breaking news coverage on demand from your smartphone. Please contact us with any questions or to set up a meeting, and don't hesitate to share this video with people who might benefit from our work. Also, if you enjoyed the video, hit the like button at the bottom and subscribe to our YouTube channel.